single day. I'm gonna make something great. That's my way.
Hello everyone, and welcome back to my channel. I am Ginger Wolf, and this is Stripped Finance. I am a feature entertainer and stripper, not a financial consultant. So any and all information received from this channel is meant only for educational, informational, and entertainment purposes. So please, if you have any questions or concerns, take it up with your financial consultant. Now with that out of the way, let's enjoy today's video. Bye! Hi everybody, welcome back to Stripped Finance. I really gotta stop meeting like this. It is currently 2:15. It's mostly just the fact that my body is, used to being awake at 2 in the morning. So here we are, about to do another video. And as promised today, we are doing a no down payment mortgage video. It was done by the Investopedia team because I really like how they set up their articles. And it was reviewed by Margaret James. Oh boy. Fact checked by Brian Eichel, I think. It could be wrong. If I am, I'm sorry. But we got Harold today. Oh god, I made him look like a crazy person. Sorry. We also got Fred and Fuzzknuckle. Don't ask me why I named him Fuzzknuckle. I don't know. It worked at the time. So here we are. Alright, no down payment mortgage. How to get one. What is a no down payment mortgage? Zero down or no money down mortgages are readily available prior to the subprime mortgage meltdown of 2008, when home values were rapidly rising and credit guidelines were more lax. Today, unfortunately, no down payment mortgages from commercial lenders are extremely rare, and those that exist are only available to select individuals who can document an adequate income, often along with a minimum credit score in the mid-600s range. Many private lenders require even higher credit scores. Thankfully, there are several no down payment public programs that some aspiring homeowners may qualify for. This article lists some of these lesser known loan options and some alternatives if you aren't eligible for any of them. It's a bunch of fancy smancy talk. So the first one they have is a VA home loan. Military families and veterans may qualify for a VA Veterans Affairs loan, which offers 100% financing. Available since World War II, this insurance program guarantees home loans for eligible veterans and active service members. Not only do these loans forego the down payment requirement, but the VA funding fee can also be wrapped into the loan. Loan qualifications will vary from lender to lender, and while there is no minimum credit score requirement set by the VA, they recommend a credit score of at least 620. VA loan applicants must first obtain a certificate of eligibility from a VA eligibility center by providing their military service. Which basically what that means, right, is you can't get a veteran's loan without being a veteran. So if you didn't do military service, this is not for you. However, did you know in some places military service is actually required? It's like community service. Everyone has to do it. I actually find that kind of cool. Like, it's kind of interesting. Alright. USD Rural Development Single Family Housing Programs. A Potential buyers who live in specifically designated regions of the country may qualify for a U.S. Department of Agriculture Rural Development housing loan. Although these are meant for remote area residents, some residents living closer to town centers may also be eligible for this program. Check the USDA eligibility page for designated areas. There are two loan programs the USDA offers for home buyers: the Single Family Housing Direct Loan and the Single Family Housing Guaranteed Loan. Both programs are similar in that they guarantee no money down loans. However, one key difference is the income thresholds for each program. In addition to satisfying local and location eligibility requirements, USDA loans applicants must fall between certain income thresholds, as these programs are geared to low and moderate income households who struggle to save for down payments. There is no stated minimum required credit score for these programs. Lenders still take applicant credit scores into account. For example, single-family housing direct loan applicants with a credit score of 640 or higher may qualify for a streamlined credit analysis. Another aspect to consider is that guaranteed USDA loans also include specific closing costs like the guaranteed and annual fees. These costs are typically 1% to 0.35 of the loan amount respectively. However, these fees can be wrapped into loan balance, thus avoiding the need for cash at closing. So when I bought my house, all of my closing costs, everything was wrapped into one big package. But I also had the option to buy different things, and one of the main things that I sprung for was homeowners insurance. So that way, during the winter, if any of my pipes broke, or while my house settled, if one of the walls cracked, or if a freak storm happened and the big tree in my front yard falls on it, and I now have a family of squirrels living in my living room, not only is the house completely covered, but they'll buy me a new one, and I get to pick it. So if you have the chance to get home insurance or anything like that, I would recommend spending the extra money and just getting it. It's worth it in the long run. Navy Federal Loans. Navy Federal Credit Union, the nation's largest in assets and memberships, offers VA loans as well as other 0% down payment mortgages to qualified members buying primary homes. Eligibility is generally restricted to military personnel, U.S. Department of Defense employees, and their family members. So, when are no down payment mortgages a bad idea? Putting zero money down has its drawbacks. If you finance 100% of a home purchase, you have no equity in the property. That is, you don't own any of it outright, like you would if you made a down payment. Consequently, lenders may tag you as a high-risk borrower and require you to secure private mortgage insurance, PMI, before they sign off on the loan. This insurance, which protects the mortgage company if you default on the loan, typically costs 0.52% of the entire loan amount on an annual basis. And unlike mortgage payments themselves, this expense may not be tax deductible. Finally, zero down payment mortgages often carry higher interest rates than traditional mortgages, since lenders usually reserve the best terms for borrowers who can pay upfront cash. Alternatives to no down payment mortgages. If you don't qualify for one of the zero down payment loan programs, alternates exist, such as local loans. Nearly every American state, country, and city offers some type of home buyer incentive program that provides down payment assistance, closing cost assistance, low interest rate home loans, or a combination of all the above. Many are restricted to buyers who meet certain income levels, and some are restricted to first-time home buyers. Furthermore, some programs cater to groups of professionals such as teachers, medical personnel, or emergency first responders. While not all of these programs can eliminate the need for a down payment, some offer grants or interest-free loans that cover some or all of the down payment. FHA programs. If you don't know what FHA means, it means first time home loan people, right? It's what I did when I got this time. So, these loans require 3.5% down. The FHA also has the Good Neighbor Next Door program for teachers, police officers, and other public employees, which offers a 50% discount on the list price of a home as long as the eligible buyer agrees to live in the home as their principal residence for 36 months. Basically, it has to be your primary house for, I think it's like 3 years. Yeah, it's 3 years. Piggyback mortgages. This strategy involves taking out two loans, one for 80% of the home's purchase price, and the other for as much of the remainder as possible. Prior to the subprime mortgage crisis, an 80-20 split was quite common. In today's tougher climate, the max might be an 80-15-5 plan, where you finance 80% with the primary mortgage, 15% with a second mortgage or home equity loan, and make a 5% down payment. And then the easiest one is just, postponing, saving up your cash as time goes until you have like 10,000 is a pretty sizable down payment for anything. So the bottom line, gone are the days where practically anyone could secure an easy mortgage with little or no money down, but there are public programs and a few private lenders who can help. But if these don't work for you, financing with a down payment might not be a bad decision. Alright guys, it is now like 2:25, almost 2:30. That's going to be it for today. This one ended up being kind of a long one. But I hope y'all enjoyed it, and I'll see you next time. Bye! Hi guys, thanks for making it this far into the video. While I'm cooking you up some new financial advice, don't forget to like, comment, subscribe, and if you can, share. And I'll see you next time. Bye!